This podcast is brought to you by the award-winning prop firm, Fidelcrest. Trading Nut, episode 201.
I'll monitor yields, which I'll come on to because I really believe, hand on heart, that a lot of traders don't implement bond yields into their FX trading. And it is imperative, especially in this market cycle. It is a massive little life hack, in my opinion, especially in a high interest rate market, because the Fed, especially, they monitor their bond yields, and it can tell you a lot about where the potentially the economy is sitting and where potentially central banks will pivot, and you can build trades off of that.
The market's going to do something. Your job is not to fight it.
The market never ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the Trading Nut podcast. I'm your host, Cam Hawkins, and today we've got Charlie from Westwater Associates on the show. Now, Charlie is just 20 years old and managing funds from his office in Canary Wharf, which is one of the trading hubs in London. He is actually one of the, he got trained up by a past guest, and in fact is a business partner of a past guest on the show. You're going to find out who that is when you start listening to the interview. And a couple of his colleagues he mentions in the show as well. We're also going to look to get one of those guys on, so we're putting a whole piece of the puzzle together here for you all. He is a smart money concept style trader. In fact, he's come up with his own version of it. You're going to find out how that works and more about that in this show, but he also breaks down everything on a price chart, and this is probably one of the, I suppose, craziest videos I've seen in terms of the knowledge that he brings to the table as just a 20-year-old is ridiculous. And we go through his entire trading week at the fund, what it looks like, and it's all broken down. We've got fundamentals in there, we've got correlations in there, we've got smart money concept trading in there. It's everything. So you've got to go and check that out after the show. Before we get into the show, there are just a few things. So you'll see here I've got a new cap on. I've got a new cap. If you're listening to the podcast, you won't be able to see it. You'll need to go to the YouTube channel and check it out. I thought I'd upgrade it to something on brand. I mean, the blue and the white isn't really on brand. You can see here. I even got the Trading Nut logo on the back. So if you like this, guys, if you think you'd like one of these, then let me know and we'll see what we can do. I even thought I'd get a camo one as well. Right, so that's just it on the caps. Now we've got the Robot Lab Live is up in the demo. So this is what we're doing is we're building a trading robot out across the course of a few weeks with a group of people on a live stream, all my Robot Lab members, and we've got one up there now. We're looking to get it to pass a funding challenge. We're doing a demo test to start off with. First few days didn't go so well. In fact, we managed to blow half the account in 2 days. How do we do that? For some weird reason, the bot took a 50 lot trade when it should have been taking like a 0.1 lot trade. Worked out what the bug was, fixed it. We've redone the test and we're starting it again from today. So if you want to check that out, head over to the Robot Builders Club page and you better follow it there. And just on the Robot Builders Club next week, we are going to do a Black Friday sale. So if you do want to get on board with getting access to this bot in particular, and then the other bonuses I'm going to throw in there for the Black Friday sale of Robot Builders Club, then please stay tuned. And it's only going to happen for a short period of time. So you're going to need to stay tuned, stay subscribed on everything, and just keep an eye out for Trading Nut. Now, talking about Black Friday sales, one of my past guests, Andrew Mitchum, who happens to be a guest that the guest on the show that lives closest to where I live. It's only a stone's throw away. We've actually never met because it is a stone's throw across some water, which I don't go there that often. Now, he is also doing a sale, and it's a ridiculous 68%, let's almost say 70% off his sort of entire kit and caboodle. If you do want to get access to that, though, it is a very short time frame. It's called a dime sale, and for 15 minutes only 15 minutes. The first 15 minutes of the sale, it's going to be at that ridiculously 68% discounted price. What I'm going to do is put a link in a card here to his show notes page. So if you want to get access to where that is, then click on the link in the card. I'll put one in the description as well. This is if you're on YouTube. There should be one in the podcast description as well to take you there. And hopefully you don't watch this too late, because if you do, I think it's only going to last for 12 hours and the price is going up every 15 minutes. So you've got to be quick. But I thought I'd tell you about this because it is quite a good deal. And it's come after Black Friday, so it's in context. Right, so two things before we jump in there. Scalping challenge, if you do want to take part in that, so this is a London Open scalping challenge, then hit me up at support@tradingnut.com. Let me know you're keen, and we'll be doing that again in the future. Challenges against everyone else who's going to take part in it. And maybe even against me during the London session. We'll see. And then last but not least, let's hear from my new sponsor, Fidelcrest, who's a prop firm. And I just want to remind you, they've offered up a 10% discount coupon for any Trading Nut listeners. So if you do want to get access to the Fidelcrest thing, you're going to hear more about them in a second, but you will get 10% off if you use coupon code TradingNut, all one word in caps. Okay, all right. Oh, and by the way, I didn't realize their sort of micro account funding program has got a target of just 5%, so well worth checking out. Let's hear from them and get on with the interview. Fidelcrest is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So what sets Fidelcrest apart? Well, it's their verification stage payouts of up to $30K in as little as 15 days. So you can receive your first payout prior to becoming a fully funded trader. Just complete the challenge phase and verification stage without violating any rules to receive your first payout. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more. All right, folks, here we are on Trading Nut. We've got Charlie in the house here from Westwater Associates, and he was introduced to me by his colleague, who is Alex George, who's been on the show. If you go back to episode 167, he works with Alex, and there's another guy as well that we'll get on in the future. But welcome to the show, Charlie.
Appreciate it. Thank you very much for having me on.
Well, to start off with, I want to find out all about what got you into trading, how you got started, and your journey to date. So let's dive into that to start off with.
Yeah, no. So it's been pretty recent. I mean, I started trading about three and a half years ago. I was introduced to it to obviously my colleagues now, Matt and Alex, who originally introduced me to trading. I learned off of them too, Pacific Style. Obviously, I'm pretty sure we'll touch base on anyway. The way we got obviously into the office and we grew obviously the businesses. The way we sort of turned trading institutionally and really just honed in our skills, was we just went for a business, just for a business opportunity. We took it with both hands, and obviously one thing led to another, and yeah.
Okay, well let's dive into some detail on that. So to start off with, you knew Alex beforehand, or you met Alex along the way?
So I knew Matt beforehand personally, obviously my other business partner, and then Matt was already in business with Alex. They run like a trading education firm, and that's basically how I was introduced to trading to begin with. I'd always been obviously aware of financial markets because my mum was obviously a trader, so she worked out in a firm out in Hong Kong. I couldn't give you too much details about it. She's obviously that's all out of the picture now. But I was always aware of the financial markets. I was always had that little like interest in it. So I thought, well, why not give it a go? I mean, like I was 17 at the time, so I was just a sponge for information. I thought there's no real risk of me taking this on. It's information. I might learn a thing or two, and yeah, no, it's obviously put a lot of opportunities on my lap. So. Yeah.
It's interesting that your mum was a trader. I mean, what does that do as a kid growing up? If you especially your mum, it's usually your dad, but especially your mum being a trader. What was that like? I mean, was she sat at the screens, 24/7 when she was at home, or was it very much?
Before I was born, so I couldn't tell you a lot about the experience of me being in and around it because it was before I was born.
Right.
But But yeah, I wouldn't know, honestly. But I mean, it must run in the family. But again, you'd never put obviously, it's more likely a man, obviously, like it's more likely your dad. But no, yeah, it was my mum was a trader. I've only found that out recently as well.
Oh, right.
But yeah,
okay.
no.
All right. So you started training with Alex, and he was training you up, or were you getting external trainings?
Yeah. So essentially, what it is that they introduced me to back when SMC was really, really hot. Because obviously now it's like considered the new retail or anything like that. All of them, it's kind of become the new retail. But back when it was hot, around about 2.5 years ago, I was introduced to obviously SMC, trading on lower time frames, this, that, and the other. And yeah, they really trained me up to view the market from that perspective. And then it went from there, and I just become a sponge for more information. And really just wanted to get as consistent as I possibly could in approach, and have like the correct ideology, like how try and find my personality in trading, because as cyclical as markets are, I believe that trading is quite linear. And as you mature as a person, I was still really, really young at the time, and my trading back then was really immature. If I look back to 18 months ago, my trading was really, really immature. My approach was quite immature. And as I've got a little bit older and a little bit more experienced in around like the institutional industry, dealing with a lot older people than me, and having to really speak my way into rooms, it's quite matured me as a person, and it's had a knock-on effect on my trading as well. So that's what obviously Alex and Matt introduced me to, and it really just took off from there because of who I am.
So what I'm interested in is, I mean, a lot of people, in your situation where you're just starting out, would typically be doing it on their own, and they wouldn't have somebody like working with them closely who is already doing the walking the walk. And, it's almost like you're mates with a mentor sort of thing. Yeah. So therefore you're going to have an added advantage. Were you sitting down with these guys to do the training, or was it, how did that sort of fit?
So it was literally just through Zooms, it was through pre-recorded videos. So it was technically by myself. Right, okay. And it took around about a year, and we got into business together. So like basically, me, Matt and Alex, I went to them with a business proposal, and that's how I kind of got to a personal level with Matt and Alex. I knew Matt personally anyway, from a completely different subject through like a hobby. But when I started out my trading, it was literally just through Zooms, it was through pre-recorded videos, just picking their brains, and obviously going back and forth. And then the business proposal that's completely unrelated to trading, obviously got me in a room with them, and I sort of really started to gauge and understanding a little bit more. And that's really how I started out.
So how did the training go? So like when you first dove into the markets, I mean, what was it like for you?
Inconsistent and immature, in my opinion. My approach, so obviously later on down the line, fast forward, going back about 8 months now, I was introduced to another person called Andy Bridges, a beautiful, wonderful fella, and it's been a massive help and a massive stepping stone in my trading. I was introduced to him, and we really sat down and was like, what's the issue? Because obviously, you know yourself, when you interviewed Alex, the fund had just come about, and obviously we created our unconventional hedge fund, and there was discrepancies in approach. And I was just like, well, I'm starting to see an inconsistency, because I'd been consistent on a live account. I'd been consistent with funded accounts. However, now I'm messing around with client funds, and it was a completely different ballgame. I thought, yeah, I've done live accounts. It's sort of similar, everything else. It can't be much different. But this is what I was saying about how like my trading is I believe it's very linear. And as I matured as a person, I matured as obviously a young man. So did my trading. And we really sat down and we really thought, okay, cool. Why is this not working? Why is it not consistent? And it was really because my approach towards the markets was really quite subjective. So because my approach wasn't consistent, my results wasn't consistent. And when I break down some charts, you'll see that my trades, especially from last week was probably my best week in the market. So it's really quite well timed. But you'll see that every single position is the same. And that's why because my consistency in approach means there's consistency in results. And that's really where I've gone from an SMC, which I believe is quite subjective. And I had to it didn't protect my psychology behind it, because it's a completely different ballgame when you're messing around with clients and you've got to pay out clients, because it's very institutionalized. Once it was institutionalized, it was something had to change, something had to shift, something had to move. And yeah, no,
So at the point that the guy, I mean, because this is how it's coming across, and I just want to be clear on this. So the point that the guys were getting you on the fund, you know, they were confident in your own ability to be able to like grow the accounts at a rate that was but you weren't happy with what you were doing.
I wasn't happy with the results.
You weren't happy with the results. And can you give us sort of like a before and after kind of picture based on the results? I mean, what they were happy with from a fund point of view, and what you were receiving after you sort of made some changes and got more consistent.
Of course. So for me, obviously I own the business as well, and I'm also a trader. So I have to draw that line, and I have to be very cautious of not crossing it. So obviously, from a business perspective, the business was making money, but from my perspective, as a director of the company, it's not making enough. And because I know that internally, because I know I'm not maximizing what I'm actually doing in the markets, and I'm not maximizing my return. I know I could better it. I know I could better my approach because I had to protect my psychology at the end of the day. So from a fund perspective, I can show you we was quite immature when we first set it up. So originally we were offering, so we tie in clients for it on a yearly basis, and we would offer 7% a month. For the first 2 months, we returned 5%. So we didn't reach my target. So the company didn't earn any money, because how the company earns money basically is we have to reach your target before we earn anything. So if you're a yearly client, we would have to achieve that 7%. Anything over that, that's our margin. So we weren't making any money. So like, yes, we was consistent. We made 5%, but the company wasn't making any money. So something had to change. Something had to change. It had to be maximized. And then obviously fast forward, 9 months on, it's been a breeze. We've been able to return clients what we quoted them. And it shows the maturity of the company and ourselves as well. Then percentages come down to around about 3% now. So it showed the margins have increased, the trading's increased, the returns have increased, and now it's a lot more professional, because if you're an institutional investor or just a generally high net worth investor, if I have a conversation with you, sit down and say 7%, you're going to run. You're going to run. You're not going to believe me. You're not going to believe a word I say. So that's realistically, from a business perspective, it wasn't optimal. And that's the best word for it. It wasn't perfect and it wasn't optimal. And from a trading perspective, I knew I could do better.
Yeah. And so you were the primary one doing the majority of the trading, or were other people helping you get this 7+% a month?
So basically the way we set it up, and basically the structure of it now, is that we have strategists, which is like Matt and Alex. We have different strategists. We have they're like our analysts, our strategists, and then obviously I'm a head trader, and then obviously we have another trader on that basically gives the final yes or no, because the best way of putting it was, the reason why like trade desks are so consistent, so profitable, is because they have all these different ideas coming from everywhere. Because my trading style might be different to your trading style. So when I'm doing really, really bad, you could be doing really, really well in the markets. So having all the pressure to perform and bring in the capital and bring in the returns on one person isn't sustainable, because I know because I run 2 strategies in the market. I know when it's really, really good, and I know when it's really, really bad. So I'll have bad months. I know when to turn one strategy off. I know when to turn one strategy on. So within the months, it could be a case of, okay, cool. Matt's giving me a couple of ideas, and like I have different, Alex is giving me an idea, and there's all these different strategies coming along, and all these different market perspectives that might actually work in the months that I'm not performing. So that's why we have different inputs, different outputs, and then there's a final yes or no to the probabilities. And basically I get on a piece of paper, this is what we like. This is why it lines up. Have a look at these levels. I like it from here, here, and here. Pull the trigger. And that's basically how we run things.
Okay, so sort of like a group consensus in a way, but you're the head trader to
yes.
Okay, cool.
Yeah.
And so does that mean that you managed to get your smart money concept style of trading at a level higher than Alex and Matt before to get that head trader sort of thing, or are they at that point where the strategy piece of the puzzle is more important than the actual execution on a smart money concept SMC kind of entry?
In my opinion, between obviously the 3 of us, we were better in elsewheres of the company. So for me, I'm very what's the word? Not internal. I'm an introvert. I'm an introvert,
right? Okay.
Where Alex is an extrovert. So when it comes to like obviously going to events or just generally networking with potential investors or talking to people, I'm really, really bad at that because I'm quite an introvert. And if I'm not talking about something that I enjoy or a hobby or something I'm good at, or we're not having a conversation or giving advice, I'm quite bad at obviously networking. So there's no point, obviously, Alex taking the front of the trading and then me going doing something that I'm not very good at. So we all kind of sat down and was honest with ourselves and said, look, this is one aspect of the business. This is another aspect. This is another aspect. Who's best suited for this? Who's best suited for this? And who's best suited for this? And that's why it's really just blown up over the last 6 months and everything's been running at absolute optimal temperature because we're all doing everything that is best suited for us.
Yeah.
That's the best way of putting it.
Yeah, it's really interesting because, I mean, for me, it's sort of like, you think, okay, well, people, starting up a fund and that, the most difficult thing is going to be making sure that the fund makes money and, being good in the markets, or better than, or in your case, better than 5% a month in the markets, better than 7% a month. So that for you guys is not even the hardest part. That's almost like that's just sort of bread and butter. And why is it that this style of trading that you've come up with, and why is it that you're so easily able to get that 7%, and or is it easy and be able to do it on a consistent basis, which a lot of people struggle with? Because
a lot of people struggle with, and in my opinion, it's because they don't have a consistency in approach and they don't have the data. So my two strategies are backdated at least 3 years. So I have the data through and through, month on month, day on day, why it works and what time it works. And it has tailored risk management models. So I know where my edge is in the market. A lot of people are quite subjective in their approach. They don't know where their edge is, and it kind of makes them hold back on firing on the trigger, or they take a punt at things, and there's no real consistency in how you view the market. And in my opinion, the worst that I've seen a lot of retail traders and people that struggle with generally finding consistency is they pay too much attention to what other people do. For me, if you're joining a Discord group, if you're following someone for advice, if you're following someone for analysis, why? Because they're not going to be around there forever, and their outlook on the market could be completely different to yours. The best thing you can do is mute it, find your way, find your personality in the market. Just like finding your feet as a man. Obviously, everyone goes through it. All young lads go through it when you're obviously maturing. You find your feet, who you stand for, your ethics, everything like that. Training's a lot like that. And you'll always find it on every single podcast. Whenever you go on a trader, they'll always say that trading is a lot similar to life. And it is. It's so, so true. And that's why I think that a lot of people don't find consistency and find it really hard is because they pay too much attention to other people. And that's the world we live in, unfortunately.
Yeah. And look, because that's what I was trying to get at the start, whereby, you seem to you're like, okay, I'm going to learn this stuff that the guys are feeding 100%. Me, smart money concepts, whatever it is. I'm not going to veer off and, get distracted by something I'm seeing from somebody else, and which is where a lot of people get sidetracked. Now, you did talk about at the start that you found SMC quite subjective. What parts of it were subjective for you?
So for me, all the lower time frame stuff. So we've moved in. So when we came into a high interest rate market, which was at the start of the year, all of my data that I had on SMC and my approach on trading was in low interest rate markets. I'd never experienced a high interest rate market. I'd never done any back testing or any data collection in a high interest rate market. So I had no idea how my strategy would perform. And I was getting absolutely battered. I was getting battered. My head was losing. I was experiencing 5, 6, 7 losses in a row, which everyone experiences, but it's not good enough for me. We're institutional. We have to pay clients every single Friday. Every single Friday, clients have to get paid. And especially as a new fund, we don't have that liquidity already locked with like the reason why we're so comfortable now is because we have 10 months worth of months of profit that we can kind of sit back and relax and go, okay, cool. We've got a little bit of margin to work. We've got a little bit of a cushion now. We didn't have that at the start. So a lot of tension, a lot of pressure on to perform, and there was no data. So it was very hard for me to go, okay, yeah, I've seen this before, because I hadn't. The markets were moving completely different, high interest rate market, and that's where I was introduced to macroeconomics, and now I'm like literally halfway through doing my CFA. I know all the contents, I know everything regarding economics, and you'll see my outlooks. And the reason why my consistency in approach, and massively for me is all I'm doing now is pairing strong currencies against weak currencies and then using my two tailored strategies to lean into two different technical areas. I wasn't doing that. I was literally just SMC. Okay, cool. There's an efficiency here. I've seen a 5-minute break, a 1-minute break. Okay, cool. And then I was using like a 5 pip stop loss, which wasn't really tailored to me, which wasn't really consistent.
Was that fixed across all markets? Was it 5 pips?
Yeah, it was literally, not necessarily, it was really quite subjective, but just below like strong and low highs that I believe were strong and low highs, but there's no such thing on a 5-minute time frame, in my opinion. So that was where it was quite subjective in approach, because it wasn't the same trade over and over and over again. You'll see what I mean when I come to obviously the charts, that every single position that I took is 1 or 2 strategies and they're exactly the same.
Right. Okay. And so if you had to sort of, I suppose, give an estimate as to how many strategies you were using before that shift, how many were there?
And I mean, it was just, I mean, if you consider, in my opinion, SMC as a concept, I didn't have a strategy. A strategy, in my opinion, is that you have backtested data, you have a catalogue of when it's good, why it's good, what session it's good, what days it's good, what months it's good, and there's a simple process. Everyone has their trading rules or their trading models, and it's quite subjective. It's like top down analysis. You've got to see a 1-minute break on a 4-hour point, but if you look at it from a picture perspective. Everyone you can, the reason why when I say it's consistent or subjective, if you can't close your eyes and picture your strategy through and through what happens step by step, it's not a strategy, in my opinion. It's a concept, and it's just guessing, in my opinion. That's where the subjectiveness and the consistency, in my opinion, comes.
And how were you able to, so you talked about this guy, Andy Bridge. Yeah. How were you able to identify that this was the issue, or like the subjectiveness, and then to try and rectify that so that you had more of a?
So it was through a journal, because obviously I had a whole log in MT4 because I can't run from it. It's all live. It's all a book. You can't run from it. So it's all there, and we went through step by step by step. Okay, cool. This is the picture on the charts. Okay, cool. This is what happens. This is what happens. This is what happens. And we're like, well, these trades are not the same. It's not the same trades. Okay, cool. And you sort of start to notice that they're all completely different. So how can you start to better something that there's no base or no underline? You haven't built anything from like an ideology or something you want to test or whatever else. It's literally just guesswork. And that's why you kind of have to throw it out the window. And if it's not consistent, you can't build it up from that. If there's no base that you want to do and start on a single time, that's why a lot of people will just start and just trade on one time frame, like the M15, and you can kind of start from there, because then you can literally, all you got to do is just start from the M15 and notice patterns that you like, and you can build from there. But if you're on like the 6 hour, the 3 hour, and that's what I was doing, I had every single time frame possible. And every single trade was different. So when you're going through the log, loss, all the losses were different. Where now all my losses are the same.
Right. Okay. Yeah. Okay.
And my winners were different. But now all my winners are the same.
And was Andy, was he a trader himself, or was he more of a sort of mindset?
Yeah. So he's been in the market for over 10 years now. I also have so he was more of a retail trader. He's done it all his life, and he's like pretty much retired now. Yeah. You wouldn't be able to find him on social media. He's like,
and how did you stumble across him?
He's on Instagram, Trader Bridges, and that's how I got in contact with him. Right. And we kind of, this is why networking is so good, because when you first and foremost, I hate this word, but become a person of value, or just like a general business owner, or if someone looks at you and sees value, it's very easy to get a conversation and work towards something, because you sort of can find common ground straight away and sort of go, okay, cool, you have something, I have something, let's work together and sort of reap the benefits at both. Yeah. And that's really where it kind of kick-started, and we sort of like, I'm having issues with this, and he's like, okay, cool. And we really got on as person. We were sort of the same, we were the same people. So it was easy for us to sort of find a discrepancy, because we both had the same ideologies on life. Therefore, we both had the same ideologies when it came to charts, financial markets, and trading. It was quite, pardon me, we just clicked, and that was that. And then obviously
It's interesting, because I mean, I think I remember now that Alex was talking about that in his podcast. The fact that he created this Instagram profile and really focused on that to then get to the position where people were willing to share with him that wouldn't normally share with him, which is a great way to do it. If
it is a massive tool that not a lot of people take advantage of. For me, especially as an introvert and someone that's quite scared of the camera to begin with, at the end of the day, well, obviously when we started the business, we moved into the office, we got a lovely view. I'd be an idiot not to market it and build like a base for that. And obviously I wouldn't be here talking to you now if I hadn't have done it, if we wouldn't have scaled it to what it was. So it's a massive blessing in disguise, and a lot more people should use it to their ability.
Yeah, awesome. Now, do you want to walk us through your trading day? So like even like your whole sort of business day with trading incorporated into it, and maybe just diving into the actual routine you have around the market.
How much time you got? No. So, I mean, again, it's literally, so the reason why I'm so consistent in my approach is because my day-to-day life is also, I have a set routine. How can you expect consistency in the markets and consistency in approach if your life isn't consistent? You don't have a routine. You don't stay disciplined to it. Because if I come into this, obviously I come into the business, I've got a business to run at the end of the day. It's not just me and my trading. It's not just that. I have 3 other businesses to run. I've got clients to meet. I've got different conversations to have. But on a day-to-day basis, I've got the same thing to be doing. So I'll always come into the office at the exact same time. If I know for a fact, if I don't leave my house by 5:20, I'm going to be late and I'm going to be running and chasing the day. So I know for a fact that if I don't stick to my routine, I don't go to the gym and keep my head space clear, I don't switch off. For me, it's really just the gym that helps my mind switch off. If I don't switch off, then when I wake up in the morning, I'm going to be a little bit tired, a little bit grouchy, and I'm not going to get as much done in the morning. And then I'm going to be chasing the day, which means I'm going to be not as active on the charts, or I might mismanage a trade, or I see an alert and I might not actually notice it because I'm out doing bits and pieces. And it's all well and good in the start, but it's not acceptable when we're like 10, 11, 12 months in, because again, it's not my money I'm playing about with. It's a client at the end of the day. It's very hard for me to explain. Oh, I'm sorry. I couldn't manage this position at 3:00 this morning because I was tired. There's no excuse for that. Unfortunately, it's a business, and clients don't care. At the end of the day, you're just a service provider, and you have to provide them figures. So for me, on a day-to-day basis, again, I'll get in. I'm up at my alarm goes off at 10:05 UK time. I'm in the office by 6:30. I've done my morning analysis. I've set all my alerts. It's all good. If I've got any running positions, that's all fine. No worries. And I can start on my whether it be, whether I've got to sort out, cause obviously how we pay clients is for a spreadsheet. If I've got any spreadsheet work to be doing, obviously me and Alex do that together. So we kind of shift the workload between us two. Whether we've got a potential client meeting during the day, I'll obviously set out my to-do list and just have general set targets. Whether I've got to create any social media work or get back to anyone through emails, I check my emails. And then realistically, I'll switch off the charts at about 9:30. If any alerts go on, okay, cool, I'm back on the charts. And then what I'll do is I'll monitor 4-hour closes, because all my strategies are based around the 4-hour time frame. So it's imperative for me to monitor the 4-hour time frame. So so I have to monitor every single 4-hour close. And then I'll finish up around about 5:30 in the office. I'll go home. I'll hit the gym around about 8:30. I'll get back home. I'll cook. And then obviously I'm monitoring the daily close at around about 10:00. And then that's my daily routine. And it has to be every single day. It can't be a discrepancy.
And if you like talking about the 4-hour close, so for someone who's also, you've got other things going on in the day, you might be at a client meeting, 4-hour candles closing. What happens then?
What if I'm not at the charts?
If you're not at the charts, 4-hour candle closes. If you're at, you've got on the tube, you're other side of town for some client meeting. What would you do then? How would you manage that? How do you?
I've always got my MacBook with me. If you've seen me and I've got a briefcase, my MacBook is everywhere with me.
So that takes priority. It's like a baby, right? You're going to go and attend to the baby, and everything else goes. So that is okay, right? That's interesting. Yeah. And when you're doing so how many markets are you monitoring on this 4-hour candle close?
So I only monitor the FX, and I only monitor pairs that it depends. So with my 4-hour continuation strategy, and I can obviously explain my two strategies in like a very, so it's like I've got a full explanation of it. And I've got it written down because obviously I don't want to give a misguided. I can give my two strategies, what they're based around, no problem. Sorry, what was the question? I've completely forgot.
So when the 4-hour candle, how many markets? You said FX pairs.
Yeah.
And are you talking like 28 or how many?
No. Literally, only 8 pairs. Only 8 pairs I monitor because they have a win percentage rate of either 45 or over 50%. Okay. They're the only pairs that I will monitor. I want to be hitting around about the 50% mark. So some pairs that might line up with a macroeconomic bias, like UCAD. I hate UCAD, but one of my best trades last week was UCAD. So because the macroeconomics aligned, I might lean into a technical level a little bit more and apply a strategy and take a punt at it, especially if I've got running profit anyway for the month. I go, okay, cool. I can swing a percentage at this and just take a real punt at it. But it's usually around about 8, but I do monitor different markets, to gauge a different bias. So I'll monitor the stock market to gauge. I won't never trade indices. I won't trade the S&P 500, the UK 100, but I'll use it as a base for how the economy is performing or whether we'll risk on, risk off. And then I can basically tailor that back to FX. Yeah. I'll monitor yields, which I'll come on to because I really, really believe hand on heart that a lot of traders don't implement bond yields into their FX trading, and it is imperative, especially in this market cycle. It is a massive little life hack, in my opinion, especially in a high interest rate market, because the Fed, especially, they monitor their bond yields, and it can tell you a lot about where the potentially the economy is sitting and where potentially central banks will pivot, and you can build trades off of that.
Right. Interesting. And what about news? How do you factor the news events in?
I'm glad you come onto this because I have a very, very strong opinion when it comes to like fundamentals and news. So when it comes to news events, I label them as fundamentals, but I also believe that macroeconomics and fundamentals are two different things. So macroeconomics, your things like the general global macroeconomic view, and as an FX trader, I only really care about A, inflation, or B, interest rates. Yes, I care about CPI, I care about unemployment rates because it can piece to the global macroeconomic picture, which I can then build a bias on a currency pair. So for me, the best analogy I always say is that fundamentals are the pieces to a puzzle, like the little pieces you can piece together, and macroeconomics is the whole puzzle and the picture. And the more fundamentals, like more fundamental releases. So let's take the USD, for example. You get their CPI, one piece to the puzzle, their unemployment rate, one piece to the puzzle. And you get all these puzzles. And eventually you get this one clear picture of the macroeconomic picture that then you can go and aid your USD bias. That's my two separate things, because one of my strategies is based around fundamentals and the rebalancing of interbank price delivery algorithms, like the rebalancing the price that fundamentals might have made the market imbalance. However, again, the fundamentals have to align for that.
And in terms of like red news and stuff, are you out of the market for that? Are you flat or anything like that?
No. I'm always in. I'm always in, because again, like you can predict the fundamental releases and the high impact news releases if you understand the global macroeconomic picture. So the trades that I'm going to break down is a beautiful example of that, because obviously it was the Fed interest rate decision. And we already knew that the 75 basis points were priced into the market because we understood the macroeconomic picture at the current present. They were never going to turn. There was never going to be a dovish pivot. There was never going to be a dovish pivot, because all you have to do is look at the data. Right. You have to look at their speech. They said 2 months ago that they're data dependent. So all you have to do is look at the data to understand whether they're going to hike interest rates or cut interest rates or just stop hiking completely. So it helps you can really gauge an understanding, and reading the forecast and the actual or taking the forecasted on Forex Factory, for example, it isn't enough. It isn't enough.
And what about correlation around the 8 pairs that you've got and whatever other markets you? Yep. I mean, do you factor that in, or are you choosing uncorrelated pairs or something to that effect?
Yes and no. So I do like a correlated pair. So I love US oil. I won't trade US oil. However, I do use it for correlation, especially at the current minute. So US oil is highly correlated with US inflation. So it's going to be very hard for the Fed to have a dovish pivot. If US oil is currently at these levels, it's going to be very, very hard for the Fed to slow their hiking cycle or start cutting interest rates. It's going to be very hard. So I love correlations. I love the China. So the reason why the USD took a little bit of a tumble and why why AUD has been a little bit stronger this week is because the Chinese economy has has got a lot stronger because obviously they've implemented a new they're cutting all of their COVID restrictions. So there's a lot of optimism in China at the minute, which is obviously hurting the USD, but actually strengthening AUD because it's highly correlated with the Chinese economy. So I love correlations because you can sort of look what's going on globally and in geopolitics and then make that into money. Because there's no point having an opinion on the market and an opinion on a PM, on a Rishi Sunak. There's no point having an opinion on him if I can't monetize it.
Right. Okay, but you don't use correlations in the other way around. Like if you're, taking, a buy on UJ and a sell on UCAD. I mean, you're not you're not using it in that respect and going, well, hang on a second, I've got to set up here and set up there.
Not necessarily.
Okay.
Not necessarily, no.
And what about weekends? I mean, are you holding trades across the weekend or?
Yes. Yeah.
Because
again, it's all built off the 4-hour time frame. So, great example was the two trades. So it was AU shorts and GU shorts last week that I actually took on the 27th of October, and then I ended up closing on hitting on FOMC, which was obviously last Wednesday. So I do tend to hold trades no longer than 2-3 weeks.
And what kind of time frame are you entering in on?
It depends on what strategy.
Right.
It's usually around about the 15-minute. I never go below the 15-minute now because, again, I use a lot more. I use bigger stop losses because I need to let the market breathe. I need to get my hedge levels in. I need to make sure that I'm well risked. I need to make sure I've got the liquidity there to obviously be risking the amount that I want to be risking. So I can't be monitoring and can't be entering on the 1-minute time frame anymore. It's just not suitable for that. That's why I'm saying, like, my trading's been very linear, and as I've matured as a person, my trading's matured a lot more as well, and it's become a little bit more institutionalized because I never go below the 15-minute now. It's all of my entries are either on the M15 or a 1 hour S&D level. That's me now. I found my edge.
Yeah. And like you mentioned, 5 pips as your stop loss way back in the day.
Way back.
What would be your typical stop loss size now? Or range? So
for my medium risk strategy, which is obviously the two of the pairs, so the low risk is usually anywhere between 50 to 100 pips. On yen pairs, you're usually batting around the 80 to 90 pip range. On my medium risk strategy, you're anywhere between 20 to 50.
And like most smart money concept kind of styles are going for these humongous, reward trades, upwards of 5R up. What are you looking for from the fund point of view? R&R
perspective?
Yeah, on average, yeah.
So on average, my trend continuation strategy will range anywhere between 3 and 5%. But I have a tailored risk management model in it, or trade management model. I have a risk management model as well. But my tailored risk management model will only basically my first TP. So I have 2 TP levels. So my TP1, I'll take off 80% of the position. No, sorry, that's my that's secondary. So I have a hedge level set in first, which is obviously within the range. So basically, I get into a trade. I'm looking for a H4 continuation, and I'm looking to see, okay, cool. What does price want? If price comes up into this area, where can it? Where am I exposed? Where can it hit for it to reverse? And I'm not at BE because I don't put my trades at BE.
Right.
Because I find it has a real tendency, especially on the 4-hour time frame, that you'll get in and you look for like a 1 hour break and it'll come back reverse, take you out, and then it'll obviously go run to TP. So I'll look for that first hedge level where I potentially will take off 0.5% because I risk 1.5% per position on my trend continuation strategy. So that's my first port of call. If all's well and good, and I take off 0.5% there, usually will net me around about 1%. So the position's covered now. the whole position's covered. So I'm essentially gone BE, but I've still got my stop loss exactly where I set it to begin with. So I've got
right, gotcha, yeah.
The trade has room for the market to breathe.
Yep.
And then my second trade management model, my second trade management area is ERL. So it's liquidity above or below the market range. I'll take off 85%. I'll take off 8% of the position at that point, and then I will move my stop loss to break even, and I'll let the 20% of the trade run, because obviously if we're in a trend, there's no point pulling it. So sometimes it can run for usually nets between 3 and 5%. But if we get a really good runner, and I mean a really, really good runner, it can net anywhere between that extra 20% of the position can net me another 3, 5, 6, 7%.
Right. So 3% on a 1.5% risk is essentially 2 to 1. Is that right? Yeah. Okay. Gotcha.
Yeah,
and
pretty much.
You mentioned ERL. What does that stand for exactly? I haven't heard that.
External range liquidity. Sorry. External range liquidity.
Right. Yeah. Cool. Now, just diving into I suppose the mindset around, it seems it's something that people struggle with a lot, avoid. It doesn't seem like you had any, I suppose, immediate issues with this for whatever reason. Maybe it's because your mum was a trader back in the day. It's been built into you. Is there anything any thoughts on why you don't seem to have had the struggle around, I suppose, all the things that traders struggle with, or have you? And how have you overcome them?
I haven't. And I know the reason why I've been quite psychologically adept, and it's one of the reasons why I've been so trading focused at the three of us, myself, Matt and Alex, is because I'm quite psychologically adept for it. And in my opinion, I know why. And for me, it's quite subjective because it's my own experiences of what I've gone through already in life. In my younger years, it's made me quite mentally mature. I don't know whether you've got that from me. I'm only 20 years old at the end of the day, and sometimes I come across as like a 30, 35-year-old. But for me, it's because of what I've already gone through in life. I'm very realistic. You age through pain in my experiences. So for me, I'm quite mentally tough already. So when it comes through the pain of trading, the pain of loss, the struggle, the stress of running a business, this, that, and the other, I'm constantly experiencing that on a day-to-day basis. So when I come onto the charts and my trading, there's no discrepancies between the two because I'm already experiencing that elsewhere in life. I've already done it. I've been there, worn the t-shirt, and a lot of people come into it from quite I don't want to say lucky because no one's lucky in life. We all go through things. I don't want to say privileged either, but some people have it better than others, and that is not their fault at all. But I believe it's you as a person. I can give a couple tips and tricks, but ultimately I think it becomes down to you as a person. I'm a big believer of the same water that softens a potato hardens an egg. It's not about it's about what's inside you, not your surroundings. That's my overall opinion, and I think that's what it's really come down to when it comes to myself. But ultimately, again, when it comes to mentality and generally dealing with the stress and having a real psychological edge, is again experience. I believe that there's no better teacher than experience, and there's a lot of lessons you can learn through loss, not only in your trading strategies or your trading applications, but also life. If you can look yourself in the mirror and know who you are, where your weaknesses are, where your strengths are, you're going to do very, very well. You're very well equipped for it.
And do you, other than going to the gym, are there any other things that you do from a mindset point of view to get you in the zone?
I love golf on a Saturday. Love golf.
Right.
I love a bit of golf. I do love a bit of golf. That's my gym, golf, and really my girlfriend, but it's a bit soppy for this shit.
in terms of, actually, I just literally read a book because I ended up doing 2 weekends of golf in the last couple of weeks.
Yeah.
And my golf has been pretty average for years. It's been getting worse. It's gotten worse to the point where I was actually throwing clubs and the trolley.
Oh mate, we've all been there. We've all been there
earlier this year. Now, but I started turning corner in the last 2 weeks, and I was like, what on earth has changed?
I fixed my swing.
Yeah, and anyway, I mean, I listened to this book, which somebody had recommended years ago called Golf is Not a Game of Perfect. They recommended it on this show. And I was like, okay, this is going to kill two birds with one stone. I can get a trading book here and also a golf book as well. It was only an hour and a half on Audible. I mean, what do you see any similarities between golf and your trading? And if so, what are they? You can
obviously, I think you can obviously relate to it. Obviously, playing golf as well. There's a lot of similarities between it because again, golf's a game where there's a lot of possibilities. There's a lot of varieties in swings. There's a lot of varieties in outcomes. There's a lot of opinions in golf about what you should, what you shouldn't do. And it's really, again, finding what works for you, like in your swing and in this, that, and the other. And it's so relatable when it comes to trading because there's so many different ways you can look at a market, so many different strategies you can trade, so many different opinions in trading. And ultimately, if you just switch all of that noise off and it's just you and a chart, it's actually quite peaceful. And again, if you're on a round by yourself on a Sunday evening, it's just you and yourself, and no one's got an opinion on how you swing, on your shot, this, that, and other. Just like no one has if you shut all that noise out, no one has an opinion on your loss, your win, your opinion on a potential pair. And that's where I find a lot of similarities in the two.
Okay. And last question before we jump into the quick fire round. Is there anything you would recommend? Sorry, if you had to recommend one thing a retail trader spend the next month mastering, what would it be?
Structure, 100%. I think a lot of people really overcomplicate things, and that's a lot of things that I did 10 months ago. I tried to overcomplicate the fuck out of a setup, and it doesn't need to be like that, because the more you overcomplicate it, the less consistent your approach is going to be, because the more complicated an approach, the less you can repeat it again and again and again and again and again and again. And in 10 years time, which is what we're obviously aiming for, because now we're an institution, we have to aim 10, 15, 20 years down the line. So I need to make sure my approach is as consistent as physically possible, so I can apply it day in, day out over the course of the next 5, 10, 15 years. And that's why just make it as simple as physically possible. Make your approach and ideologies as simple as possible. And then what you can do is you can build it from there. That's my one thing to manage.
Something that springs to my mind is Chinese whispers. It's almost like, if you don't make it as simple as possible, then over time it gradually sort of veers off to, it's like a hook shot or a slice. Going back to the golf analogy. Right, now, quick fire round. How long did it take you to go from trading newbie to consistently profitable?
3 years.
What's your favorite entry setup?
4-hour dominant candle, 4-hour imbalance to target, 4-hour dominant candle from a counter trend perspective, M15 flip impulsive, corrective M15, back into a potential 1 hour area of supply.
What strategies do you use to exit or manage trades? Again,
subjective between the two strategies. So I briefly touched on the trade management and the trend continuation, and the risk management again is tailored to between the two. But I believe that you'll find that out when obviously I touch base on the charts. You can see it a lot clearer. It's hard to explain because it's quite complicated.
What's your recommended trading book or resource?
I do like Trading in the Matrix, but for psychology, where it really changed my psychology, was Can't Hurt Me by David Goggins. It really just put things in perspective. So it's really good book. Really good book.
Another one I can add to my Audible. What's your preferred broker and trading platform?
Again, so I'll obviously have my broker that I'm partnered with. So obviously it's going to be a bit subjective, and obviously it's going to be a bit favoured. I use London Trading Index for my MT4, and then obviously in the hedging facilities, we'll obviously use a general liquidity provider anyway, our liquidity provider.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. Do you want to walk us through your worst ever trade?
It's hard because again, all my losses are the same now. All my losses are the same. So I can't pinpoint my worst ever because again, they're all the same.
What about back in the day? Was there any horrendous trade?
Probably the one that hurt the most and probably changed my trading. This is what hurt me the most. It was, I got stopped out. It was GU shorts and it was back on, I believe the pinpoint date was around about the 17th of February, just as the Ukraine war was escalating and just before the Fed started to increase the hiking cycle. And I was massively USD bull. I tried to get into GU shorts. We're using a 5 pip stop loss. I got triggered out and the rest was history over the course of this year. Died next part of 4,000 pips. And that probably, when that died and it ran for well surpassed 1,000 pips, that's what really hurt me the most. It really hurt me. And I thought something needs to change.
Yeah. Right. Now, last question. If you could leave our listeners with one piece of advice, what would it be?
It's a saying of mine because I am a perfectionist. Anything, any outlook, any business, anything like that, any product, any service, anything you want to go into, take the mindset of if better is possible, good is never good enough.
Nice. Now, before we wrap up, what's the best way for the traders to get hold of you?
My Instagram. That's probably the best way of getting a hold of me.
Well, look, a big thank you to Charlie for sharing with us today. Everything we discussed here, along with all the links, including his Instagram, are in the show notes. To find them, simply search for Charlie in the search box on tradingnut.com. Until next time, wish all my listeners trading happiness and success. All right, folks, so there you have it. Interview done and dusted with Charlie. Now, do remember, go and check out that video where he breaks down his week of trading, the fundamentals he talks about, the technicals he talks about. In fact, everything he talks about, you're going to be completely blown away by this guy's level of knowledge at this stage in his career. It is phenomenal, absolutely phenomenal. So go and check that out after you finish listening to this. Other things, do remember we've got Robot Lab Live. You can go and check that out over there. The Robot Builders Club Black Friday sale is going to be coming up in the next week. And the Andrew Mitchell one, if you've got to be quick on that, hopefully you haven't even left it too late already. But yeah, there's a link in the card above or the description below or in the podcast description as well to go and check that out. Scalping Challenge, hit me up, support@tradingnut.com if you want to be on the live stream with me scalping the London session. That's it. All right, guys, thanks for watching and we'll see you in the next one.